Hello traders and welcome to this free weekly market outlook. Let us see what happened on the market during this week, the previous week, and what can we expect as we going further and heading in the next week. I will start with the DXY, the most interesting positioning and instrument that is affecting the market a lot, of course, because it's the main reserve currency at the moment. We are in a downtrend, and so far we had 3 waves down, and this could be in a 4th wave, which is about either to end or to extend into this consolidation here before heading into a 5th wave. Okay, so the key level you need to watch till the end of this week, and also at the beginning of the next week is 170 to 90, 107, 100.7 to 100.9 zone, where we could have a validation of a downside extension into a 5th wave, or a continuation of this swing high, swing low once more before heading lower, or extending higher above 105. Before we continue, I will just remind you that we have good services here like Traders Classroom, where you have 3 trade setups a week with the analysis, and where you can learn by looking at the real examples how to analyze the market. We also have one-on-one mentoring here with me, which you can also be customized for your needs, and of course in cooperation with me you can easily organize the time you need and when you need to learn analyzing the market. Also copy trading as well, because we have extremely good results which you can actually see on the website, verified by a third party in the last 2 years, almost 400% to 500% return in 2 years. I underline that. Okay, let us continue. I will go on first with the crypto. I will look at the Bitcoin before we continue to indices, CFDs, and Forex market. So Bitcoin is testing this 30 to 31,000 zone. Breakable would mean that this basing is over, and then we can continue higher into 40,000 and again into this area of 50,000. But we have a strong resistance here and a consolidation in a bearish flag. So a reversal here is not excluded, okay? And a possibly extension of consolidation between 15,000 and 28,000, which will be the most painful for traders, but we have to be aware of that. Let's take a look at the indices. As maybe you saw some of analysis we publish for free, that the SPX is in deep consolidation complex wave that is actually within the 3rd wave to the downside, and that we can expect a reversal here in this triangle to once again test 3,900, and possibly break out lower to finish this, or in the case that we have a clean confirmed break above 4,200, that would be extremely bullish, and that would mark this as a fifth wave, long-term fifth wave that you can see and you will be able to see in a trader's classroom we have to the upside into 5,000. Okay, for the SPX. Regarding the Europe, we talked about this in our traders classroom. The DAX is also knocking this resistance, which is long-term resistance to the upside, and could easily reverse to the downside in these rising wedges. So critical positioning, and you have to be very careful by taking and placing trades, and by which size of the trades you will take on this positioning here. We are inclined to reversal, but that in details you have in our traders classroom. Nasdaq is in a similar position like the SPX. This is that channel, swing channel, which is looking, fairly bullish. I have to admit that. But then again, we did not finish this impulsive move to the downside, and I could not regard this as a fourth wave to the before the fifth wave extension to the upside, even above 17,000. But if it breaks above 13,600 with confirmation, then we should, and you should, align with that price action and the wave count change. Until that happens, short against 13,400 is viable option. Let's take a look at the gold positioning and the oil, and we will finish with this section of indices and CFDs. You can see how this perfect sideways rectangle is forming and aligning up. So again, critical level for the upside continuation is 2050, 2060, and only a break and a confirmed one above this previous high will be extremely bullish for the instrument. But up until then, we could see one more swing down, or again swings down inside this rectangle sideways consolidation, which is not yet finished. Regarding the oil, this is the channel which is most probable scenario, and we had almost a touch of this channel lower, but then you all know what happens with this reversal higher into again 85, but only a break above 85 would lead to a continuation higher. If we will not have that, then we will stay with the downside scenario, and so far short trades with a good risk reward are a little bit more aligned to the short to higher probability than long trades. From the forex pairs, I will just look at the two pairs, Aussie dollar, also connected with the risk, and pound USD. Aussie dollar is consolidating here, bouncing from this important level, key striking level 0.66, where a break below that will lead to a reversal lower, and a break above 0.68 will lead to a continuation higher to the upside. On the other hand, pound USD played break of this rectangle, which was similar to gold, to the upside, and is not much affected by the risk assets, and we could see a continuation higher. So far it looks fairly bullish without any kind of indication of reversals, but you need to be careful. As I said, the DXY is a critical downside resistance. This we do know that for the pound, these overthrows above significant resistance are not uncommon, and the reversal from here would mean that we'll go back into consolidation. Okay, so this is it for this free market overview. I don't like let's say long overviews. This is brief, and this is how this is done. You can learn to analyze the market in under 10 minutes using the price action area, waves, support and resistances, channels, and everything else. And for that you need to register for the one-on-one mentoring or for Traders Classroom, where you will have an access to library of trading setups and analysis whenever they came up or comes up, and it is 3 times a week. Thank you for watching this analysis. I wish you a happy trading, nice relaxing weekend, and fruitful next trading week. Bye.